Cross £90,000 in turnover, and VAT stops being a choice. That's the moment a lot of freelancers and contractors suddenly realize they've entered a part of business nobody ever properly explained. Because on paper, VAT sounds simple. Register, add 20% to your invoices, file a return, job done. But then the question hits, wait, if I'm charging 20% more, do I just get to keep that? No. And this is the bit you need to understand before anything else. That extra 20% is not your money. It's HMRC's money. You're just the unlucky middleman holding it for a while. So if you invoice a client £1,000 and then add £200 in VAT, your business has still only earned £1,000. The other £200 is tax. It might land in your bank account. It might sit there looking all spendable. It might even start whispering, go on, buy the better laptop. Ignore it. Because when your VAT bill comes due, HMRC will want that money back, and they will be dramatically less relaxed about it than you are. That's why new VAT-registered businesses get caught out. They see more cash coming in, assume they're doing even better than they were, and start spending money that was never theirs in the first place. Then the VAT return shows up like a tax-themed jump scare. So the golden rule is simple. Ring-fence your VAT. Move it to a separate account. Track it properly. Treat it as untouchable. Because if you leave it sitting in your main bank account, your brain will absolutely try to adopt it. Once you register for VAT, you also need to choose a scheme. Most small businesses start with cash accounting, where you only pay VAT once your client has actually paid you. Standard accounting is based on invoice dates instead. And with the flat rate scheme, you pay HMRC a fixed percentage of your turnover. Which one works best depends on your cash flow and expenses. Now, the other thing people panic about is clients. They think, if I add 20%, won't everyone lose their minds? Usually no. If your clients are VAT-registered businesses, they can normally reclaim that VAT from HMRC. So if you charge a business client £5,000 plus VAT, they pay £6,000, reclaim the £1,000, and the real cost to them is still £5,000. Which means in a lot of B2B work, consulting, contracting, professional services, clients generally do not care nearly as much as you think they will. Where VAT does sting is when you sell directly to consumers because they can't reclaim it. That's where the 20% actually feels like a real price hike. And one more thing people miss, the VAT threshold is based on turnover, not profit. So HMRC does not care what you've got left after software, travel, rent, subcontractors, or the 12 different subscriptions you forgot to cancel. If your taxable turnover goes over £90,000, you need to act. Because miss the registration point, and you can end up with penalties and backdated VAT, which is a deeply annoying way to discover admin has consequences. So if you're approaching the threshold, the main takeaway is this. VAT is not a pay rise. It is not bonus money. It is not free cash with a 20% sparkle filter on top. It's tax you're collecting on behalf of HMRC, and the sooner you treat it that way, the less painful VAT registration becomes.